Welcome back to Crypto Meets AI. Jerry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. Now let's get into it. XRP ETFs, XRP yield, limited supply of XRP available on exchanges, Evernorth XRP Treasury. It's clear that they intend to cause the biggest supply shock in history. The floodgates are creaking open. XRP ETFs are already here, and this is just the warm-up. Live futures, spot, and leverage XRP ETFs from Volatility Shares, Teucrium, ProShares, Rex, and more already trading. But the real show starts when all the spot ETFs go live. Just like with Bitcoin, liquidity doesn't trickle, it floods. The same institutional firepower that sent Bitcoin surging could do the same for XRP. And this time, it's not just hype. It's an asset with global settlement utility, stablecoin traction, tokenization rails, and billions in integrations. The door is opening, but it won't stay open forever. Don't miss this opportunity, my friends. I promise it's going to be one for the ages. Teucrium focuses on ETFs for agricultural commodities and cryptocurrencies, using transparent future-based products for diversification and volatile markets. Volatility Shares specializes in leverage, inverse, and crypto volatility ETFs for traders, offering high leverage options and managing billions in assets. ProShares, top issuer of leveraged inverse dividends, thematic, and crypto ETFs for hedging, income, and broad market exposure. Rex Osprey partners to create ETFs combining traditional structures with blockchain perks like staking rewards for assets like XRP and Solana. Tuttle Capital offers innovative thematic and leverage ETFs with strategies like ODTE calls and short selling for agile, affordable investing. Now even CNBC is pointing to XRP and HBAR ETFs possibly launching within the next few months. Honestly, it's going to be within the next 20 to 30 days, in my opinion.
Of crypto, Nate, similar to the push to market we're seeing in IPOs, you're seeing a lot of what you call a boatload of crypto ETF filings. What does that mean, and how does that differ from what we've seen in the past?
Well, it's interesting because the three major stock exchanges, so NYSE, NASDAQ, and CBOE, they have all filed with the SEC for generic listing standards for crypto ETFs, which basically means that the exchanges wouldn't need to seek specific approval for each spot crypto ETF as long as it meets certain criteria. So this would streamline the approval process. And that's important because right now there are filings out there from multiple issuers for XRP ETFs, Solana ETFs, Cardano, HBAR. We could go on down the list, but there are a boatload of filings out there. And the expectation is that the standardized crypto framework will be implemented, say, in the next 2 months or so. And so if and when that happens, I think you're going to see the floodgates open. We're going to see a wave of approvals, and you're going to see, again, a boatload of new crypto ETFs coming to market.
Listen to this. It's right here at 1 minute and 2 seconds.
And so it's 2 months or so. And so 2 months or so. And so 2 months or so.
Do you guys hear that? Am I hearing that right? I think this dude farted during the interview. That's too funny. It just made me lose my whole train of thought here. It is becoming quite clear that XRP is being held back until it's too late for the public to buy it cheaply. And comment down below and you tell me, what do you think 1,000 XRP coins will be worth in 2026? Comment down below and let me know. Because the moment the SEC approves the XRP ETF, everything changes.
This is why the XRP ETF is such a big deal. Because here's how this plays out. The moment the SEC approves an XRP ETF, everything changes. Wall Street gets a green light to allocate. And if you think they're going to miss a chance to buy an asset built for global finance under $10, think again. That ETF demand will absorb supply at an insane pace. And unlike Bitcoin, XRP supply is actually shrinking through every transaction via the burn mechanism. XRP is designed to get more valuable with use. Now couple that with Ripple's RLUSD pushing more volume through the XRPL, and XRP's value engine becomes exponential. Think of it like this. RLUSD adoption, volume, bridging, XRP burns, lower supply, plus ETF demand, explosive price action, and yes, we're seeing it in real time. $500 million in RLUSD in 6 months, 604% growth, second fastest growing stablecoin globally. And Ripple's just getting started. Now here's the part few are talking about. Ripple didn't even need to build RLUSD. They were already solving cross-border payments using other stablecoins and XRP. But they realized something powerful. Owning the stablecoin layer means controlling the velocity of volume across the entire ledger. And volume harks power. Because if you're moving billions of dollars across a decentralized ledger, you decide the rules of engagement. You can optimize the flow, you can maximize efficiency, you can extract the most value, and deliver it to XRP holders through reduced supply and increased relevance. That's the game Ripple is playing. They're not just building a coin, they're rebuilding financial plumbing for the 21st century. And once that becomes obvious to Wall Street, to regulators, to everyday investors, the floodgates open. Let's zoom out.
I believe we are there right now, and I believe it's being pushed through because of the ISO 222 implementation that's going to go live in about 2 weeks. When the banking industry and the DLT industry speak the same language, that's when the floodgates open. That's when the flip of the switch begins. The window of opportunity is closing. XRP. And is the world returning to the old rules, gold, trust, and the law? When I asked Dr. Judy Shelton what lessons from Bretton Woods could guide us today, her answer cut deep. The key rule of law versus the rule of men, she said. Right now, the world's most powerful currency is entangled in soap operas and scandals at the Federal Reserve. That's no foundation for trust. Under Bretton Woods, $35 equaled 1 ounce of gold, an unbreakable rule that anchored global stability. People need something solid, she told me. Sound money comes from convertibility, not from the whims of central bankers. And that's the exact reason why Nixon took us off the gold standard, was so they were able to print money out of thin air like they have been ever since he took us off the gold standard. That was the only reason they did it. They needed to be able to print money out of thin air and rob the American taxpayers. That's what's been happening ever since.
When we talk about restoring integrity to money, it is impossible not to look back. There were times under the classical gold standard and later Bretton Woods when gold wasn't just a commodity, it was the foundation of global trust. What lessons from those eras could guide us as we try to rebuild stability today?
Well, I think the main thing is the importance of rule of law versus rule of men, or I might say women, because one reason the Fed is such a mess today is because one member of that voting committee, who's a member of the Board of Governors of the Federal Reserve, Lisa Cook, her name has been called into question because of the allegation of mortgage fraud. But in the papers that she has been filing to allow her to continue to vote on monetary policy and continue in that role, her own lawyers said that if she were removed, it would unleash financial chaos. And I think that's just a reminder that to have the world's most influential currency subject to an ongoing dispute, almost a soap opera, with a member of the Board of Governors of the Federal Reserve shows how tenuous that approach is. And I think that people need something much more solid, a rule-based approach. And the ultimate rule under the Bretton Woods system was that $35 could be converted into an ounce of gold. And that was immutable. That was just the anchor for the system. So I think it's very important to provide this guarantee of sound money, and specifically the guarantee of convertibility at a pre-specified price for the US dollar. And that just delivers a much more solid monetary foundation, which is far more in keeping with a system that is devoted to free markets and free people and is not reliant on the individual foibles or alleged malfeasance of any one member of a committee that votes on what should be the cost of capital.
It is pretty wild that this Lisa Cook, who's on the Board of Governors of the Federal Reserve, can still keep her job when she's been charged with mortgage fraud. It's just wild how corrupt our system is today. And last up, some HBAR news. Japan just backed the national stablecoin pilot with its largest banks. Everyone's asking, does Hedera HBAR have a chance? And Hedera already runs stablecoin pilots with major Asian banks. It's fast, compliant, and built for real payments, not speculation. Japan is exploring the rails, and Hedera is already on the tracks. Well, that's what I have for you folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.